on bank earnings today. J.P. Morgan Chase, Goldman Sachs, Wells Fargo all beat forecasts with their results. As for J.P. Morgan, Jamie Dimon says, quote, we continue to see positive momentum with the U.S. consumer, healthy confidence levels, solid job creation, rising wages, which are reflected in our consumer and community banking results, guys. But obviously the reason stock is down in part is that they lower their NIM forecast by $500 million.
Yeah, look, sometimes you look at a quarter and you say, please give me a highlight. Look, the efficiency ratio was good. But when I look at what the other banks have done, I understand that J.P. Morgan is good. It's just not to shoot the lights out. And I don't think when I look line by line, I mean, look, you got some good numbers here. You have the consumer and community banking, which is this line about just the consumer itself. Hey, $13.8 billion versus 13.7. These guys are coining money. How about that? It's just they're not coining money as I'd like it because of net interest margin. I'm fine with it. I mean, David, do you think I should be more excited than fine with it?
No, more excited than fine. I mean, the conference call has begun, and as you might have expected, new CFO, by the way.
Yes.
Focus Jennifer on this. Peepsack.
Yes.
Yes.
Taking over from Marianne Lake, who's running the consumer business now, right, Jim?
Yes.
First quarter, our guidance was $58 billion. They're talking here about net interest income and net interest margin again, and some pressure on the long end at that point. The pressure persisted, and in fact increased, and so we pulled the impact of the long end through in terms of our outlook. And on the short end, the range of outcomes are obviously quite broad. This is the CFO again, and so we thought about a range of outcomes of 1 to 3 rate cuts, and so you can think about if it's one cut, $57.5 billion. If it's more, you get the point. Right. It just keeps going down from $58 billion depending on how many rate cuts you're going to get, which we know, but many would think, Jim, the bank stocks have already reacted to
I know. It went 11 today. That wasn't so great. Obviously, look, this is one where the conference call has always mattered the most. So I feel like sometimes I talk to David about this is when I am most naked at this very single moment. But J.P. Morgan was not something where you're going to see a lot of holds to buys. Goldman, though.
Right. To your broader point, FIC, we used to talk about FIC all the time, down 3. Nothing to cry about. Yeah. Equities down 12, of course. Trading revenue, IB revenue, though, below expectations.
Yes. And look, again, I don't want. It's one of these things where you look at it and you say to yourself, that wasn't as good as Citi. Again, I think a fair comparison. But then again, Citi's not as levered to the R rates because Citi's back being very international. If you look at the first page of the Citi, actually the second page of the Citi, they're talking about Mexico. Mexico. Then there's Southeast Asia. Lot good. And so I'm there for them. And J.P. Morgan, I'm okay. It's no J.B. Hunt.
But Goldman, as we can see here, at least
there's a lot
26
good,
minutes before we get started with trading, is going to be up this morning, perhaps as much as almost 2%. They had some significant equity gains, I think $741 million in gains. That's in part from their private equity ownership of companies that went public, and they clearly seem to have been marking them fairly conservatively. Yes. And so you mark that up. That helped on the quarter. That's not necessarily recurring. So you're not going to want to pay for that as an investor.
Right.
But that said, everything came in either in line, it would think, or it seemed, or above, at least judging from the response of the analysts who follow the company. We've also got a conference call that will get underway there very shortly, I believe.
But when I look at the Goldman thing, what I find that I'm going to say that it's no longer as episodic. David, I see as much as maybe 63 to 65% of the revenues being recurring. Last year at this time was probably less than 50% that was recurring. 62 to 63 allows you to put a price to earnings multiple. They haven't had that. Hey, you know what's exciting about Goldman? They're ready for Apple. They're ready for Apple. There's more than 100 million people that might get that card.
Yeah, we still have yet to receive any real details.
Absolutely true, but they are all set for second half. That's something I didn't know.
No, so you think the back office is prepped for that kind of demand? That's been your concern on Goldman.
It better be.
The credit card.
They're saying that my concern, I think, you're going to get comfort that my concern is misplaced and that Apple is ready and Goldman's ready. That is something that, the other firms have said to me, don't be taken in. I feel that this company has got a little bit better risk management than people realize. Obviously, these are much lower risks.
Yeah, but to your point, on something like this, you've got to roll it out properly. You don't get a second chance to make a first impression.
They're ready for $100 million, is what I'm saying.
Okay. Where are the expenses from all this showing up? Because the revenues are not
second
yet.
half.
And,
second half.
And you see, when you go through line by line, investing and lending, investment management, and everything else, I mean, they are, we've talked to David Solomon about it. It's not cheap in terms of what they're spending.
But it could be the biggest hit that I've ever seen.
We're not talking just about the credit card. We're talking about Marcus. We're talking about a number of the platforms.
And Marcus, obviously because
in terms
of the short
of reaching
rates.
a consumer.
But look, J.P. Morgan's coining money, but not as much as expected. Goldman is coining money, but in a less episodic, more recurring way. I am getting some surety on Apple. Now, you could say you're dreaming because Apple has no idea itself how many people want the card. What I like is that they're setting it. Look, are they as ready as Capital One? Are they as ready as Citi? No one could be. But the fact is that they can expense Apple this next 2 quarters. And by the way, on Malaysia,
I'm sure they'll get asked a lot of questions about these various efforts on the call, even though they don't figure very prominently at all in the current earnings.
I have to tell you that the card's going to be big and Goldman's going to make a lot of money, but it's not this year.